Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chingy. Good evening. Today is Friday, September 5th. I'm analyst Jiang Jidao. If you like the show, remember to like, subscribe, and share. If you have investment questions, feel free to leave a comment. If I don't have time to answer today, I'll try to find time next week to reply to everyone. And as usual, I'll also be answering questions from students asked yesterday. Alright, good evening everyone. Let me start by answering a question that Zaya Maywood just brought up. He mentioned the so-called Magnificent 7 stocks, plus Broadcom or some other companies, and said that together, their market cap accounts for nearly 40% of the total. So, is there anything wrong with that? Actually, we discussed this topic in detail in class yesterday. Overall, if the market's capital or stocks are completely concentrated in just a few individual stocks, that means as much as 40% of the capital is pouring into these specific stocks. So, what happens with these stocks? If any of them experience significant negative news or a major pullback one day, it will have a big impact on the overall market's downward momentum and risk. In other words, while risk and investment might originally be diversified, if funds become concentrated in just a few sectors or specific stocks, then as soon as those particular stocks or sectors decline, won't that put significant pressure on Taiwan's index? Of course, this is just one of the tools for reference. Additionally, there's also the issue of whether companies like Broadcom and Nvidia can be replaced. In a moment, we'll analyze and follow up on Broadcom's financial report for everyone. Alright everyone, good evening. Happy Friday to all, hello to SH, Hui Junjun, and good evening to Gao Ganghuang as well. Also, good evening to Little Donkey, Ming, and Kei Kukuli. Good evening, everyone. Okay, first, let's look at today's investment focus. Because there are some important economic data being released tonight, we definitely need to pay special attention to them. Especially since the FOMC meeting is very important, and the non-farm payroll numbers, which reflect the job market, along with the unemployment rate, will once again impact tonight's market trends. Tonight, we have the last major data release of the week, and also an additional vote from a BOE committee member, so be sure to pay close attention to who that is. As we know, looking at the final data, aside from tonight's 8:30 p.m. non-farm payroll numbers and the unemployment rate. In fact, yesterday we saw the release of the ADP small non-farm payroll data, and also the weekly initial and continuing jobless claims numbers. Although the ADP small non-farm payroll figure came in below market expectations, it was only slightly lower, not a significant decline. For example, yesterday's reported number was about 54,000, which was below both market expectations and the previous figure. However, as we mentioned during the trading session yesterday, as long as the number doesn't fall sharply to the point of indicating a recession or a decrease, and as long as the gap between the actual and expected numbers isn't too large, then the market won't treat these worse-than-expected economic data as signs of a recession. Unless the range between the expected value and the actual reported value is too wide, if the difference is really significant and much worse than expected, then the market will start to worry about moving toward a recession or a hard landing. At that point, there will be relatively more pressure on the index or the overall market trend. But fortunately, as of yesterday, whether it's the initial jobless claims or the ADP private payrolls, they're still within a controllable range. So tonight, everyone needs to pay special attention. Later, I'll give you a preview of tonight's non-farm payrolls and the unemployment rate, including the previous values and the expected changes. As for the Federal Reserve, both the dovish and hawkish members, today, each side has added one more member. As we get closer to the mid-September FOMC decision, you'll see more and more officials eager to make their positions clear, whether they're doves or hawks. Today, with one new member on each side, we need to pay special attention to what exactly they said, and whether their comments will have a real impact on the overall market or on the monetary policy decision in September. On the industry side, there's also news about Tesla's CEO, Elon Musk. Is he about to make a turn, and if so, who is he turning toward? Trump. Why do people say this? Because yesterday, as we know, the White House hosted a banquet for about 20 high-tech industry leaders, inviting them to a White House dinner and a tech summit. But notably, Musk was the only major figure who didn't attend. Why didn't Musk participate? Of course, today Musk came out to clarify that it wasn't that he didn't want to attend, but that he had something come up. He did receive the invitation, but he couldn't make it because of other commitments. So what exactly was the reason for his absence? And going forward, will Trump and Musk be able to resolve their previous disputes and disagreements? If they do, of course, it would definitely help Tesla's stock price. So today, I'll briefly discuss the details about why Musk didn't show up. In addition, I'll also touch on some earnings reports from companies in the industry. This major yoga brand, many people need gear for working out, right? A lot of my friends love Lululemon's yoga pants and yoga mats. Exercising and staying healthy is great, of course, but when it comes to Lululemon's earnings report, their financial performance has been declining quarter after quarter. Now, the earnings report released today also fell far short of market expectations, and they even lowered their guidance. So, what exactly went wrong with their numbers, and how should we look at their stock price? In today's earnings segment, besides Lululemon, I'll also give you an update on Broadcom's earnings. When it comes to ASICs, or application-specific integrated circuits, both Marvell and Broadcom are the two biggest companies in the field, with Broadcom being the most important leader. So, when it comes to these specialized chips and general-purpose chips, they really set the tone for the industry. So how should we choose between NVIDIA and Broadcom? Or will the competition between these two companies end up pulling the market in different directions? Today, we'll also be discussing these related topics with everyone. Alright, have fun, and good evening to everyone. And also, who is this? Big Mouth 4 gets up and delivers to your door, new student. Alright, good evening, Marissa Chen, Alice Fu, and Grace Liao. First, let's do a quick recap. Yesterday, aside from the small ADP, the mini non-farm payrolls. Although it was below market expectations, the extent to which it missed expectations wasn't as bad as people imagined. So, the market was able to breathe a little easier. At least in the job market, things are just moving toward a softer landing, and there hasn't been any major collapse. Last night, a very important data release, the ISM non-manufacturing PMI. Before it was released, the previous value was 50.1, and the expected value 50.1. Bloomberg estimated it at 51. What was the actual number? It surged up to 52, remaining in the expansion zone above 50. As for the new orders index, specifically the non-manufacturing new orders index, the green line here, it shot up significantly to 56. Of course, a big reason for this is related to the tariff war. Before the tariff war, many companies rushed to make purchases, so we can see the new orders index spiking sharply to 56. Meanwhile, the PMI index. It rebounded to 52 points, so both indices remain above 50, indicating an expansion period. Of course, this data also gave the market a bit of reassurance, because it shows that the overall economy isn't heading toward a recession. So yesterday, this data provided some support for the US stock market. And today, the most important thing is, of course, at 8:30 tonight, the non-farm payroll numbers. Last month's figure was 73,000, and the expectation for this month is 75,000, which is about the same as last month. As for the unemployment rate, it's expected to rise from 4.2% to 4.3%. As for the unemployment rate, there really isn't much of a difference. It's staying within the 4% to 4.5% range, not moving much. But what everyone should pay special attention to this time is the non-farm payroll numbers. It's unusual this time. Why? Last month's non-farm payroll numbers, in May and June, there were significant revisions, and the numbers also missed expectations. Trump directly fired the head of the Bureau of Labor Statistics at the Department of Labor, just straight up, you're fired, right? After firing that person, he replaced them with his own pick. Because of this, the market is paying close attention to this new appointee, and everyone is watching closely to see what the non-farm payroll numbers announced tonight will be. How good will the data be? Or how bad could it get? This is extremely important. If the release numbers stay around the expected value or the previous value, roughly 70 to 80,000, or let's say 60 to 80,000 people, then there really isn't much of a problem. At worst, it might be 10,000 less than expected. I think that's still within a controllable range. But if, after the data is released, even though they've changed the head of the Statistics Bureau, so logically, the numbers should have been polished or touched up a bit, yet after all that beautifying and tweaking, the actual number that comes out is declining or even significantly below expectations, maybe down to 20,000 or even 10,000, that would be a big deal. That would mean the real situation is much worse than we thought. If the entire labor market data is much worse than the actual situation, that would impact the US stock market. In the whole massive market, everyone would start to worry about the continued decline in employment. And what could this decline gradually lead to? Because if the unemployment rate is high or the non-farm payroll numbers, these employment figures drop significantly, everyone will worry that consumer spending might decrease next, layoffs will keep increasing, and once consumer spending goes down, companies will also cut back on investments and factory expansions. This is all in response to things like tariffs and rising costs. All of this will impact GDP, the overall economy, and the stock market. Instead, things will move in an unfavorable direction. So, the non-farm payroll numbers or unemployment rate data can be slightly below expectations, but they can't fall far short of what's expected. If, at 8:30, the numbers come out and they're way off from expectations, then everyone needs to be especially careful, because right now, with the US dollar and the stock market at these historical highs, even a small misstep could have big consequences. If some really bad data comes out, then the pressure and impact on the US stock market will be quite significant. So everyone, please be careful. Alright, Jeff, good night. Also, hello to Red Palace, Louis Young, and Max Line, is it lie? Good night, everyone. Alright, what's this about the Magnificent Seven? As for Tesla, as long as it's still around today, it's still part of the Magnificent Seven. At least according to our chart, Tesla is still considered one of the Magnificent Seven. So even though its performance is still quite weak, just like you mentioned, it's lower than TSMC and Broadcom, it's still among the giants. Maybe one day, if this group expands to the Magnificent 8 or 10, then Broadcom, TSMC, or even other companies like Oracle might be included. Anyway, no matter what, this group is still highly representative. This company is still very significant. Now, aside from the unemployment rate and non-farm payroll numbers, everyone should also pay attention to the average hourly earnings monthly and yearly rates for August. This is also very important. If the monthly or yearly growth rate of hourly earnings surges, it means labor costs are rising significantly. If labor costs go up a lot, what will companies do? When wages for their employees, whether hourly, monthly, or annually, increase, these companies will inevitably have to raise their prices and adjust their costs. They have to raise their prices, because they need to cover these operating costs. So, they have to increase the selling price. Once the selling price goes up and is passed on to consumers, of course, our prices and products will also rise accordingly. So, it becomes a tug of war. When wages are high, companies often have to adjust their prices upward. If the price for one or two items goes up, people start to worry and might not buy. If people are afraid to buy, that becomes a big problem. So, businesses end up stuck in a dilemma. So, when, as we said, wages are too high, companies keep raising prices, and this tug of war keeps going. This back and forth has a huge impact on overall prices. Over time, if people's wages don't go up but companies keep raising prices, it creates even more problems. Consumer spending will dry up, and people's desire to purchase will drop. Why? Prices are too high. So, when we look at monthly rates, when we review inflation and non-farm payroll, we need to pay attention to this. Right now, the monthly wage growth rate is 0.3% for both the previous value and the forecast. Fortunately, it hasn't gotten wildly out of control or spiked sharply, at least that's how it looks. As for the annual rate, the previous value was 3.9%, forecast 3.7%. Good night on YouTube, and good evening to Lee. Alright, if you have investment questions, just keep leaving them here on the message board. If I don't have time to answer, there might be a chance to reply next time. Who's messaging right now? Sometimes it looks like there aren't many. For new viewers, if you leave a comment and I don't get to answer it, that's okay, just leave it. When I have time, I'll go through and respond to each one. Alright, so someone else asked about the current foreign capital futures positions. Are they still reliable? The short positions have dropped significantly, and spot trading continues to be bullish. Yes, this is still something you can refer to for the Taiwan stock market. Right now, it looks like foreign investors are still mainly buying in the spot market, but their short positions in futures are gradually decreasing. I remember back around June or July this year, the short positions were still as high as 55,000 to 60,000 contracts. Now, open interest for short futures positions has dropped to about 23,000 contracts, just over 20,000. At least they're buying in the spot market, and short futures positions are decreasing. This means that foreign investors, with the tariff war already set, since August 7th, all countries have basically finalized and implemented their measures, whether it's a 10% or 50% tariff, pretty much all the tests have been handed out. In this situation, as the market's uncertainties gradually settle, what about knowledge? As for foreign investors' short positions in futures, it's true that they've been gradually reducing their hedging shorts. This, to some extent, is a positive factor for the Taiwan stock market in terms of market positioning. It's a plus. Of course, the biggest factor that can either boost or suppress the Taiwan stock market, in my opinion, still depends on the US stock market. It still comes down to the US stock market. If the US stock market goes up, especially the Philadelphia Semiconductor Index, the Taiwan stock market will be passively pulled up. Taiwan's largest weighted stock, TSMC, accounts for nearly 40% of the index. So, as long as TSMC makes a move, it affects the whole market, companies like MediaTek and Fubon Financial. Delta Electronics and other high-weighted blue-chip stocks, if they move even a little, the index will basically be held up at that level. But there is a concern here, and everyone should be a bit cautious. The concern is that Taiwan's stock market is a bit different from the US market. In Taiwan, about 40% to 50% of the index weight is concentrated in just the top 5 or top 10 stocks. In other words, you might see the main index holding steady in the 23,000 to 24,000 or even 25,000 range, staying at these high levels. It feels like the market is holding steady at these high levels, staying above the 20-day moving average, the monthly line, or even the quarterly line. It all seems pretty stable, just like the US stock market. Everything looks stable. But in reality, if you take out the top 5 or even top 10 heavyweight stocks, the situation is different. Then you'll notice that some small-cap stocks, some traditional stocks, actually haven't kept up at all, the broader market hasn't kept up, and some of them have even been in a downtrend the whole time. Okay, unless the stocks you bought are really related to AI, like AI servers, AI assembly, or AI cooling systems. AI-related PCBs, high-end flexible boards for AI, and so on, there are many of these. Or semiconductor stocks, like equipment, testing, or concept stocks. So, it's either semiconductors or AI, these might keep hitting new highs with the broader market and have a chance to go up, including equipment in factories. But aside from these, you can see that all shipping, auto, bicycle, machine tool, and many other types of stocks. Even sectors like textiles, cement, and petrochemicals haven't gone up, they just haven't risen. So you can see that in the Taiwan stock market, it's really just a few sectors holding things up. It looks great on the surface, but in reality, many secondary industries or subsidiaries aren't doing well. You need to keep your eyes wide open when making choices. Don't assume that because the main index is hitting new highs and seems strong, all stocks are benefiting equally. In fact, many stocks haven't kept up, so you really need to pay special attention. Alright, that's at 8:30, and later on I'll be tracking those important economic data points with everyone. Now, moving on to answering some of your questions. Yesterday, let's go through them one by one. The first one is from Little Donkey, right? Little Donkey was the first to ask. Will Nvidia acquire MediaTek? Actually, this was a rumor circulating yesterday and the day before. The rumor was that Nvidia was going to use, what, 70, right? 72 or 75 billion US dollars to acquire MediaTek. We think this is just a rumor to glance at and move on. The chances of it actually happening are pretty low. Why do we say the chances are low? Because if you recall and have read related articles, Nvidia and MediaTek have some product similarities, but they're quite different. Nvidia is a general-purpose chip. MediaTek's main business is mobile phone chips, which are specialized and lean toward ASICs, application-specific integrated circuits, so their chip design focuses on these specialized applications. So, what about Nvidia and MediaTek? They might, as we've mentioned, even had previous collaborations, like the GB10 chip, they work together on that. In the future, they might also collaborate on automotive chips and other types of chips. So, I think their strategic partnership will be a plus. If it's a strategic alliance or partnership, it will create synergy and be beneficial for both parties, something along those lines. I make up for what you lack, and you make up for what I lack. That's basically the idea. But if you're saying that Nvidia wants to completely acquire MediaTek, I think there are a lot of difficulties and many factors to consider. Because then it's not just a matter of a strategic alliance anymore. They'd have to take into account, if I remember correctly, a few years ago Nvidia also tried to acquire ARM. They were going to spend $40 billion to acquire ARM, but who came out to oppose it? China came out against it, and other countries did too, because of anti-monopoly concerns. So if Nvidia really wants to spend over $70 billion to acquire MediaTek now, the first thing is, who's going to oppose it? The Taiwanese government might oppose it, right? Because there are some concerns about national security, or because MediaTek is a leading company in IC design. It's related to the lifeblood or technology of the whole country, so how could you possibly let Nvidia acquire it? So it's possible that Taiwan or the Chinese market, or even the US or other countries, might not accept this kind of so-called monopoly after such a massive acquisition. There are a lot of factors to consider. So we think this news about Nvidia acquiring MediaTek is probably just something to take note of for now. As for whether it could actually succeed in the future, I think the chances aren't very high at the moment. However, there is a possibility for strategic cooperation. Now, the second question is about the M10. Amy asked if gold can keep rising and what products to buy. Yes, actually, gold's price keeps hitting new highs, right? Gold's price is driven by international risk aversion, and possibly because the US dollar index is trending downward, along with interest rate cut expectations. So when the US dollar falls, gold tends to rise. In addition, there are geopolitical risks related to foreign debt, and a whole bunch of other concerns like trade wars that make people worry. That's why gold keeps reaching new highs. As gold hits new highs, the current short-term bullish trend hasn't changed. If you really want to buy gold-related products, just pay attention to the 5-day or 10-day moving average for now. Treat them as short-term support levels. If the 5-day or 10-day moving averages hold, there's not much to worry about. Looking at the daily K-line chart for gold, the 10-day moving average is this blue line. As long as the price doesn't fall below this blue line, there's no need for major concerns. Alright, as for what kind of products to buy, well, some investment institutions or experts are saying that gold could reach $4,000 or even above $4,500. Whether it will actually get that high, we don't know either. We'll just have to wait and see as things develop. As long as the market trend, momentum, and news are all still in place, the overall bullish pattern for gold hasn't changed. So, which gold-related products can you look at? I'll give a few examples. You can buy shares in gold mining companies, or even gold jewelry companies. If you're not sure how to pick individual stocks, you can just buy gold-related ETFs instead. These ETFs cover related mining companies, jewelry manufacturers, and processing companies. For example, in the US stock market, there's probably the SPDR1. This company issues the GLD ETF, which stands for gold shares. Its ticker symbol is GLD, so you can look it up and you'll likely find this SPDR option. Also, there's the iShares Gold Trust, which is also related to gold ETFs, and its ticker symbol is IAU. As for others, well, there are a lot of different ETFs, even in Taiwan. For example, Yuanta has some gold ETFs, like single or double leveraged gold futures ETFs, and so on. You can use all of these as references, but when investing in these gold-related products, everyone should still pause and take a closer look. After all, gold as a commodity tends to have relatively higher volatility when it comes to commodity investments. Similarly, remember, just like with gold, as long as the 10-day or 5-day moving average hasn't been broken, there's no need to worry too much. As for whether it will reach $4,000, well, let's just keep watching and see. Alright, now for the third question. Who do you want to ask? Do you want to ask Hector? Okay, Hector. Yesterday, you asked, because yesterday we were testing, right? At the beginning of the show yesterday, we told everyone that if, in my previous investment argument, I used Taiwanese to translate it. Alright, because we know that on our website, on our official website, there are some international versions. The international versions are voiced in English. That is, we take our videos, our show, and use AI to translate them into English, including English translation, English voiceover, and so on. The whole interface appears in English, and so on. Yesterday, I tried it out to see if it's possible to translate Taiwanese into English, and what I found was, after checking, that the Taiwanese interface only gets about a third of it translated correctly. About 1/3 is translated accurately, but for the other 2/3, when the AI can't translate it, it just mutes the audio or there's no speech at all. Okay. So overall, if our show were to use Taiwanese, AI still wouldn't be able to replace us, still couldn't replace us at all. And just to answer a question from yesterday, someone asked about speaking blatant lies, because yesterday we talked about that topic, about the incoming director Milan, who was telling blatant lies and making some statements. Blatant lies, how do you say that in Taiwanese? How do you say it in Taiwanese? Honestly, I don't really know how to say blatant lies in Taiwanese either. If I were to translate it in plain language, it would probably be something like Jing Jing Gong Gong Hui, Biu Ji Gong Gong Hui. That basically means telling lies with a straight face. I guess that's what it means. As for the English version of the live stream page, some students have been asking about it. If you have time, you can go check it out. If your English is pretty good, you can listen to the English version. My English isn't that great, just basic conversation level. What about your English? For the English version, you can find it on our Tech Innovation official website. In the video section, I've highlighted it with a red box here. In this video section, you'll see the latest English version appearing one after another. Right now, it's in the live stream area. The live stream is the daily live content, and the videos are basically uploaded there. So, from our official website, you can go to our YouTube channel, and under the videos section, you'll find the related English versions of some of the programs. So, if you have friends, maybe they're living in the US or abroad and can't understand Chinese, you can invite them to watch the English version here. Alright, those are the answers to the 4 questions from students. Alright, let's come back and take a look at this Milan board member. So, about the Milan board member, there are a lot of officials' remarks, and I'll give you some commentary. First, this candidate for the Milan board said that no one has asked him to commit to supporting anything. The president has the right to express opinions on interest rates, and he said he will make the best decisions based on the data. Basically, this content is from when he was in the Senate. I think it was the banking committee, giving some testimony. As for this testimony, of course he has to say things that are more objective and can't make biased arguments, because that's the only way the committee members will vote to support his appointment as a board member. So you can see that what he says is just for reference, since some of it is pretty neutral. But in reality, when he actually becomes a board member, we believe he'll still lean more toward Trump-like viewpoints. Will he have a chance to successfully join the board? I think he still has a chance. Right now, it looks like he does. If he joins, of course, for the whole, let's say, FOMC. With the board members' votes, the number of members from this faction will naturally increase, and the chances of a more hawkish stance will go up. So just having a basic understanding of this is enough. Now, there's another board member we should pay a bit more attention to, because within the Fed, he's considered the number 3 person. Third, oh, good evening, Jihao, and good night, YT. You left a lot of comments, maybe you didn't have time earlier. When I have a chance, I'll check out what you wrote. There are a lot of things, and we'll take a closer look at them when the time comes. Now, the other person, the number 3 in the Fed, is Williams, John Williams. Williams is actually ranked 3rd in the Fed and is a permanent voting member. He's the president of the New York Federal. What he said was, although tariffs have put upward pressure on inflation, he believes that, for now, there hasn't been a sustained increase in inflation or a second-round impact. So, everyone can gradually shift their focus accordingly. So, regarding inflation, we can relax our focus a bit. But he also mentioned the current job market, because the job market is declining. Whether it's the number of people leaving the workforce, the ADP numbers, or even non-farm payrolls, it seems like the job market is performing more weakly and chaotically. So, he said that the risks in the job market are currently rising, and this will continue as time goes on. He believes that if the Federal Reserve cuts interest rates next, it would actually be quite appropriate. In other words, his argument is gradually shifting toward a more dovish stance. So, looking at the probability for the coming months, it still seems pretty high right now. As for one of the committee members, Harker, he tends to be more hawkish. But I should mention that Harker doesn't have a voting seat this year. However, Williams has a permanent voting seat, so their importance is a bit different. Harker said, to reiterate, that there's no reason to do so in September, at least for now. He believes that inflation staying at 2% and continuing to rise is enough reason not to support a rate hike. However, as mentioned, he doesn't have voting rights this year, so his impact is limited. Looking at the overall situation, regardless of whether Milan's nominee actually joins the Federal Reserve Board, and if by chance he gets to participate in the September vote, it currently looks like the dovish and hawkish members are about evenly split, roughly 50-50. So, it probably won't be a unanimous decision, and the likelihood is that rates will either stay the same or not change much. There are currently a few more dovish members, so there's a chance that when it comes time to make a decision in September, the outcome could be more favorable for the stock market. In the meantime, we still need to keep an eye on employment data or other key indicators. As for the 10-year yield, since more members are expressing dovish views, the yield has dropped to 4.25%. The terminal rate is now at 3.73%. Additionally, the expected number of rate cuts has increased to 2.39 times, almost 2.4 times. So, if we're talking about 2.5 times, assuming each cut is about 0.25, or 1 notch, then the total cut would be around 0.5 to 0.65 in range. So, a 2-notch space is something we can keep an eye on. That's a bit more detail on the rate hikes and the terminal rate for everyone. As for the US dollar index, it dipped slightly by 0.32%, and it's still holding at the 50-day moving average. When will there be a bigger fluctuation? When? We should keep an eye on tonight's non-farm payrolls. Also, good evening to everyone joining in, and good night as well. The non-farm payroll numbers tonight will have a significant impact on the US dollar index, as well as on the probability of rate hikes or cuts. Besides that, I want to remind everyone about next week, even though we won't have a live stream next week. Actually, it's not that there won't be a live stream, it's that I personally won't be streaming because I'll be giving a talk at a branch office. So, around September 10th and 11th next week, please pay attention to the US PPI and CPI data, the Producer Price Index and Consumer Price Index. Keep an eye on those numbers. Then, the week after that, on September 18th. Alright, that's great. When I'm back to live streaming, we'll all need to pay close attention to the Fed's interest rate decisions that week. So, to recap, keep in mind the key dates I just mentioned, today's non-farm payrolls on September 5th, next week's PPI and CPI, and then the Fed's rate decision on September 18th. These are the main dates to watch. Because all of these will have a huge impact on the US dollar index, bond yields, the US stock market, and individual stocks. You really need to be extra careful. September is always a turbulent month anyway, and it tends to be volatile. There's usually even more volatility, so everyone needs to be especially careful with their positions in the CH market. Be extra cautious. By the way, speaking of next week, I'll be heading to Kaohsiung to give a talk. That's right, next Thursday, September 11th, I'll be in Kaohsiung for a seminar. It's actually a joint event for several Kaohsiung branches, so a few branch offices will be organizing it together. If you're interested in topics related to US stocks or macroeconomic trends, come and listen, or just have a chat with us. If you're interested in these topics, US stocks or macroeconomics, then you're welcome to join. For more information, you can check with any of our Kaohsiung branch offices to find out the details. Alright, now let's turn back and take a look at the international situation. So, what stage is the trade war at right now? I think Trump said today that he will officially implement the trade agreement between the US and Japan, which means almost all Japanese goods will be subject to a 15% tariff. And this is either not cumulative or not added on top of the original rate. So, it will be based on the original tax rate. In addition, there will soon be special tariffs on semiconductor imports. But the key point is in the next part, he will exempt companies like Apple. How so? As long as they increase investment in the US, as long as they significantly expand their manufacturing facilities in the US, he will grant these companies tariff exemptions. This includes the examples we just imagined and possibly some responses as well. This could include Oracle, possibly OpenAI, and maybe even Apple, Microsoft, and many other companies, even Meta. As long as they significantly increase capital expenditure in the US, expand manufacturing opportunities, and create more jobs, then what about Trump? According to these principles, of course, this is also a good thing for the US itself. According to these principles, he would grant some tariff exemptions for semiconductors, including for TSMC. So everyone should remember this principle. For every country and every company, it still comes down to three things: buying American goods, investing in America, and opening up the market. As long as countries and companies do these three things, buy American goods, invest in America, and open up, then basically Trump will be open to them and he'll have the chance to make a deal. So if they keep doing this, sending things back to the US, no tariffs will be imposed. For these companies, even with some ups and downs, some are still on the rise. Okay, so buying American goods, increasing imports of American products, and investing in the US, setting up factories in the US, and what else? Opening their domestic markets widely, allowing the US to export to them. As long as these three factors are met, these countries won't have much to worry about, so note that. As for Mexico, we've briefly looked at this information. It's about choosing sides. They might side with the United States because there's really no choice. The situation is stronger than the people, so they're siding with the US. As for the Mexican president, this new leader, he mentioned that in the future, they might target countries that haven't signed trade agreements with Mexico. They might start imposing tariffs, and who's one of those countries? China. So, will Mexico later on impose tariffs specifically on China? I think Mexico still has to consider this carefully, because after all, the Chinese market is still quite large for Mexico. If they rashly decide to impose tariffs specifically on Chinese products, will that ultimately benefit Mexico's economy more, or will the drawbacks outweigh the benefits? Right now, I think it's still too early to say. So, I think we'll just have to wait and see. Even though Mexico has to pick a side for now, there's really no other choice. Alright, let me add a bit more to my point. Also, regarding the price of New York crude oil, it dipped slightly by 0.33%. Overall, as long as the 200-day moving average hasn't been surpassed, the concerns or pressures about inflation aren't really concrete yet. At this stage, we can see that a lot of geopolitical risks are cooling down, the intensity is decreasing. With these risks subsiding, of course, oil prices aren't moving much, and it's not easy for them to rise. So there's not much concern about inflation. Actually, we've been updating everyone on the oil price situation for quite a while now, so that's about it. Actually, it's pretty much the same as before. There haven't been any major changes. Internationally, whether it's Russia-Ukraine or Israel-Hamas, things have more or less settled into a certain pattern. The situation has basically stabilized, and that's just how it is. What's more important, I think, still comes down to the key points are the Federal Reserve's decision on September 18th, as well as the economic data we just mentioned for September 5th today, and also September 10th and 11th. So, as we keep talking, it's now 8:30. At 8:30, we're seeing the latest economic data just released. Let's take a look. So, what about the economic data? The data that was just released at 8:30 is basically the US unemployment rate for August. As for the unemployment rate, the market expected it to come in at 4.3%. It did come in at 4.3%, which is in line with expectations, but it's a slight increase from the previous value of 4.2%. So, the unemployment rate is actually okay. It hasn't gotten out of control. But when it comes to non-farm payroll numbers, that's something to be a bit more cautious about. The non-farm payroll numbers just came out. They are significantly lower than expected and lower than the previous value. Only 22,000 jobs were added, which is really very low. It's not just a decrease of 10,000 jobs, and it's not just off by 10,000 or 20,000 from expectations. It's much more than that. It missed by 50,000 jobs, which is a pretty big warning sign. As for the unemployment rate, let me say it again, the just released unemployment rate is 4.3%, and there's not much concern there. The unemployment rate didn't spike. It's about what was expected. But the non-farm payroll numbers dropped sharply from last month's 73,000 to just 22,000. This data clearly shows that the overall job market is relatively weak, and the cooling in the job market is already quite significant. This is beyond what everyone expected, and of course it increases the likelihood of a rate cut. It raises the chances of a rate cut and pushes the Fed officials more toward a dovish stance. That's right, it does increase the probability of a rate cut, but honestly, with the numbers dropping from 75,000 to 22,000, it's a bit much, it's a little overdone. This over will of course be interpreted by the market as a chance for a rate cut, but the market will also worry whether the economy or the labor market is heading toward a recession. So overall, I think when it comes to the impact on the US stock market today, everyone still needs to keep an eye on things. The impact could still be significant, so we should be a bit cautious because after all, honestly, the drop this time was a bit more than the market expected. We're not talking about a difference of 10 or 20,000, but a direct gap of 50,000, which is quite a lot, so we need to be a bit cautious about this. As for the average hourly earnings, both the monthly and annual rates, the monthly rate stayed at 0.3%, which isn't a problem, so overall wage costs and wage pressure haven't increased. The annual rate also came in at 3.7%, which is in line with expectations and lower than last month's 3.9%. So overall wage inflation is not out of control. Wage inflation and costs are not out of control, and the unemployment rate is also not out of control. But the only thing is that the non-farm payroll numbers are significantly lower than expected. So if we really want to break it down, strictly speaking, out of the 3 data points, 2 are basically in line with expectations, almost 2 are steady, and 1 is off the mark. So with 2 steady and 1 off, that's the situation we're looking at. Today, the volatility in the US stock market is likely to be relatively high, so it's better to pause and observe for now. Tonight's economic data is quite important. Once this data is released, of course, the probability of the Fed cutting interest rates will increase, but we still need to watch closely. Tonight, we need to be especially careful to see whether investors in the US stock market interpret this as a sign of a hard economic landing or recession. Alright, looking at the industry side, let's examine the tug-of-war between bulls and bears on the Nasdaq. Some think that since economic data is below expectations, there's a chance for a rate cut. However, if economic data falls too far below expectations, are we heading toward a recession? Tonight's volatility, well, it's the same old saying. Actually, since around July or August, we've been constantly reminding everyone in our land program that historically in August, whether it's the S&P wink with tongue sticking out index or the US stock market in general, especially for those who invest in cash flow in the stock market, usually August sees the largest net outflow because some people need to pay taxes. You know, there are many reasons why people sell stocks. So, looking at the history from January to December, every year in August, the net outflow of funds from the US stock market is typically the largest. As for September each year, we often talk about the September curse. The market in September tends to be more volatile than any other month of the year, and it's a month where the probability of a decline is much higher than that of a rise. In other words, from August to September, there are a lot of economic data releases, many Federal Reserve meetings, and a lot of monetary policy decisions. Plus, this year, August is even more special, starting from August 7th, 8/7, which just happens to be 87. That day also coincided with the start of Trump's reciprocal tariffs. This is a global phenomenon, so there are variables related to tariffs as well as some factors like tax cuts. The major tax cut bill even includes a lot of policies on immigration and more. Besides the uncertainties brought by Trump, there's also the impact of economic data. That's why, during August and September, we keep telling everyone to be especially careful with position management because of all these factors. Historical trends, as well as this year's numerous data releases and events, are all having an impact, so you really need to pay close attention. Now, let's take a look at the industry side of things and talk about that a bit. Who is this? This is Tesla's CEO, Elon Musk. And Musk, what is this? Let me take a look. Sugar, sugar, good night. Remember to listen to your teacher, okay? Just take this as a reference. Of course, if it helps you all, and if it can help you avoid misfortune and seek good luck, that would be the best. Alright, let's take a look. This is not favorable for the US dollar. US stocks, right? Anyway, the data just isn't good. There are quite a lot. This content, just now, 23,000 people were announced, then 22,000. Be cautious, as everyone is still worried things might head toward a recession. The numbers have really dropped too much, the data is just way off, way too bad. Yeah, it's really way off. It's just way too bad. If the stock market opens lower today, I think it's actually fine if it goes down. A drop is reasonable, after all, it's been hitting new highs non-stop. If it drops for a day or two, or even, in my opinion, if it drops 3% or 5%, that's still within a controllable range. I'm not saying it will drop that much in a single day, but for example, over the next half month or the next 2 or 3 weeks, maybe the S&P wink with tongue sticking out index could fall by 3% or 5%. If after the interest rate decision on September 18th, there are some uncertainties and the market becomes very volatile, and let's say it pulls back by 3% or even 5%, I still think that's within a controllable range. In other words, it's still a pullback within a bullish structure after a strong rally. Without this kind of healthy correction, it would actually be difficult to face the Q4 market. Then it will be more difficult. Why? Because the market never comes down, you never get a more complete, significant pullback. Many people are afraid to buy in, and when people are hesitant to enter, it makes trading harder. Without that turnover, it's hard to generate another wave of momentum to push the market higher. If it keeps hitting new highs, just going up without stopping, the more it rises, the more people are afraid to buy. The higher it goes, the more hesitant people become. They just watch it go up and feel less confident about buying. For those who already bought, they just keep holding, but as soon as it goes up a little, they want to sell, sell, sell because it just feels off, you know? Because right now, the fundamentals seem really good, but are they really good enough to justify such high valuations? Is it really so good that the US stock market's P/E ratio should be as high as 27 times? It doesn't really seem that great. So everyone is worried. They're worried about not wanting to be the last one holding the bag, that kind of feeling. So if during this whole process there's a small, minor pullback, I think that if after the pullback the market goes up again, that would actually be healthier for the overall market. This kind of market health, of course, would also make the outlook for the fourth quarter more promising. So that's something to keep an eye on. That's why if you've made some profits in August or September, even if it's just a little, taking some profits and putting a bit in your pocket is actually a safer approach. Alright, let me add something about Tesla. Yesterday, the White House invited a lot of big names from the tech industry to showcase AI research results and talk about huge investment amounts. Really a lot. They even called out people by name. We watched the video and read the news, and it said that Trump was sitting next to Zuckerberg. Zuckerberg said he was going to invest $600 billion, so he was sitting right next to Trump. And who else? Bill Gates, the founder of Microsoft, was also sitting nearby. So Trump also asked Gates. He said, "Everyone is investing so much, Apple is going to invest too, increasing their investment to $600 billion, and Meta is also putting in $600 billion. Then Oracle, or was it OpenAI, they're all investing that much as well. So, Microsoft, how much are you going to invest?" Bill Gates could only scratch his nose and say, "Oh, I invest about $80 billion every year. Every year, I definitely invest $80 billion. So Trump was really happy whether what they said was true or not. Anyway, as long as you say something that makes him happy, that's all that matters, he's happy. In that situation, he gets to save face, he looks good, because all you big company bosses are willing to support him. And supporting him means he achieves the political results he wants. And you tech bigwigs all know this. When you're talking to these politicians, of course you have to say what they want to hear, that's just how it goes. So he attends these companies' events like Meta, Apple, Microsoft, Google, OpenAI, and many, many others. Musk didn't attend, you know. Musk said he didn't attend, but he was invited. He said he couldn't make it because he had something else to do, though he didn't say what it was. But he did send a representative to show up on his behalf. And then yesterday, actually, Trump also specifically mentioned Musk. It's been a long time since he talked about Musk. Don't forget, in the past, Trump and Musk were actually good friends. They used to call each other brothers, really close. So when Trump talked about Musk, he said Musk is 80% genius, but 20% has some issues. He didn't specify what those issues are, but from what we can gather, he's probably referring to how Musk likes to go head-to-head with Trump. You could say that, in terms of loyalty to Trump, there might be some wavering. So this 20% of issues probably refers to the fact that, even if you really don't like Trump's policies, whether it's his tax cuts or the Make America Great Again initiatives, even if you disagree, you shouldn't publicly call him out or confront him directly. And you also shouldn't keep posting about it on your X platform or other social media comment sections. Constantly making bold statements, always saying how bad Trump is. Anyone would be upset seeing that, especially since he's a former US president, someone who really cares about his image, and yet you keep criticizing him, publicly going after him, and repeatedly saying negative things about him. No one could tolerate that. So I think the 20% issue refers to how Musk is just very outspoken and says whatever's on his mind. Of course, that's how rich people are. When you have money, you can do whatever you want. He's the richest person in the world, so he acts willfully because he can. So that's the 20%. If this issue is addressed, meaning his comments about the US president or policies. If he could just tone it down a bit, adjust his tone or wording, then I think there's still a chance for Trump and him to patch things up. Why? Because honestly, a lot of the policies Musk wants to implement, whether it's things like Tesla's self-driving taxis, if he wants to roll them out in different states and regions, he needs some kind of federal policy endorsement. He needs approval to operate, only then can he move forward, right? And things like insurance or cooperation contracts with NASA, like with SpaceX, right? If you want to develop and take on these contracts, you can't afford to be on bad terms with the government. Also, things like subsidies for electric vehicle development. If you have a good relationship with the government, it's possible those subsidies could come back someday. It's not impossible for subsidies for electric vehicles to return, because, now, as for Trump, he just says that electric vehicles are great, but he thinks not everyone needs an electric vehicle, so there shouldn't be so many subsidies for them. But the real Trump, when it comes to these so-called, let's say, alternative energies, there are only two that he really has an issue with, the ones he opposes. What are they? One is solar power, and the other is wind power. Solar and wind energy, why is that? Because first, he thinks they harm the environment, and second, he says that the equipment or components for solar and wind power are almost never made by American companies or use American products, so he believes the US doesn't benefit much from them. It's based on this issue, so when it comes to what to buy or use as alternative energy, the main focus for development is nuclear energy. That's why nuclear energy concept stocks have been skyrocketing recently. For example, we've previously talked about stocks like UU, UEC, VST, CG, and GV. SN and these other companies, some are involved in nuclear power plants, some in power generation, and some in uranium mining. The upstream uranium mining companies like UU and VC have been continuously rising, with some of them doubling in the short term. Because of the support from policy themes, that's why I keep telling everyone that companies or industries backed by policy themes are extremely important. As long as the policy is willing to endorse and support them, their stock prices really do tend to rise easily, because the future will definitely move in that direction. The government provides subsidies, infrastructure, and many other things. For example, in the case of nuclear energy, it's much easier for it to rise with the tide. So, will Musk from Tesla reconcile with Trump in the future? I think he will, because honestly, with so many companies under Tesla, Musk really needs policy support. Does Trump need Musk? Yes, and Musk also needs Trump. The relationship between Musk and Trump is one of mutual need. For Trump, Musk is a huge financial backer. He once spent nearly $300 million to help Trump get elected. So compared to other Republican donors, he's a really major one. You can't afford to lose such a big backer. If you let him go and he ends up supporting the Democrats, that would be a disaster. If he supports the Democrats, then in next year's midterm elections, the Republicans could lose, and that would be a huge problem. So, for Trump in this White House round, why did he do that at the summit in the White House? Why did he actually invite Musk? Musk said he was invited, but as for the details, we don't really know. Anyway, looking at the whole situation, that's just how things are. So, moving forward, I think that in the end, because of business considerations, these two will probably patch things up and get back on good terms. As for Tesla's stock price, let's take a quick look. Yesterday, it went up slightly by 1.33%. The downward pressure line is still okay, and after breaking through it, it pulled back for 2 days but managed to hold its ground. We've mentioned before that once this downward pressure line is broken, it shouldn't fall back below it. What happens after the breakout? That pressure line will become a support in the future. So if it pulls back again, as long as this support isn't broken after consolidating, there's a chance it could move up again. There's definitely a chance for it to go higher, but the premise is that you, Musk, shouldn't make any more reckless statements. Don't go around saying you want to start a new political party, or keep criticizing Trump's policies this and that. Gradually, there will be some public events and summits. If Trump invites you, just show up. Don't make him lose face. You'll start to see more of this kind of situation. He should gradually focus on his main business. As for politics, don't get too deeply involved. If he tries to maintain a good relationship with the authorities, then Tesla's stock price does still have some room to rise. But the premise is revenue and profit, and not letting politics take up too much space. If that's the case, the stock price will definitely reflect its true value. Okay, so that's some additional information about Tesla. Now, moving on to Broadcom. I'll quickly mention Broadcom. Their earnings report today was very good. Revenue and profit for Q2, Q3, and the whole year all performed well. Better than expected. Great. For numbers, take a quick look. In Q3, AI-related revenue will rise to $6.2 billion. This quarter, it was $5.2 billion, and next quarter, it'll be $6.2 billion, 11 consecutive quarters. Growth is really strong, and they even mentioned landing a new client with a $10 billion order. They didn't say who the client is, though. Anyway, it's probably one of the 4 major CSPs. You can guess for yourself. They didn't specify. Could be Amazon, it could be Meta, it could be Google, or it could be Microsoft. Anyway, the point is, they landed a $10 billion order no matter what. That's a lot, right? So here's the key point. They've gotten a lot of $10 billion orders, haven't they? Now, everyone is speculating. Could this mysterious client be buying Broadcom's ASIC, those special application chips? Does that mean they won't buy from NVIDIA? Actually, that's not necessarily the case. A long time ago, we didn't really know. I can't remember if it was this February or which month exactly. But didn't we talk before about the relationship between NVIDIA and Broadcom? Remember, we mentioned the story of Jufin and Jingguashi, right? Mining, whether it's gold, copper, or coal, Jufin and Jingguashi are famous for gold and coal. So when we're mining for gold, what do we need? We need mining tools. So if you want a universal mining tool, something that can dig up any kind of mine, coal, copper, gold, whatever, you need a tool that's versatile and powerful enough. So what do you have to buy? If you buy a power drill, you can dig any kind of mine. Just go BRRR and you can dig them all, right? So this tool that can dig everything is like a GPU chip. A GPU chip is unbeatable. It can handle anything. No matter what kind of mine you want to dig, you'll always go by this GPU, this power drill, to do the digging. First and foremost, if today you specifically and exclusively want to dig only for valuable coal, or you only want to mine precious jade or just for pure gold, then you might genuinely need some very special, more highly specialized tools. Tools that are even more incredibly powerful for efficiently digging up gold or coal. These could potentially be special electronic drills or unique, custom-designed shovels and so on, among other specialized equipment. Then you need to look for specialized application chips. Who makes these? Companies like Broadcom or Marvell are doing this. So, each has its own market, its own supporters, and each shines in its own way. They won't completely replace each other, but this market will only keep getting bigger because you can imagine the possibilities. People who know how to mine are just this big group. They can mine any kind of ore. So these electric drills will definitely go by NVIDIA because NVIDIA is just so good, so easy to use, and its performance and efficiency are strong. Once you start mining, you can dig everything up at once. But if you want to mine slowly, to use things at a slower pace, then you look for something else, you go for Broadcom. So, when Broadcom reported its earnings this time and people wondered, how come there's a $10 billion order? Who transferred the order over? You don't need to worry too much. Some of these transferred orders might just be for their special requirements, that's all. They're not completely giving it up. Just because they didn't buy doesn't mean that's the case. They haven't shared all details, right? The stock price went up slightly by 1.23% yesterday. But in the US pre-market today, it's up a lot. It's staying above both the 20-day and 50-day moving averages. The trend has followed the 24-day moving average all the way, and recently it pulled back to the quarterly moving average. This pullback to the quarterly moving average. Doesn't this look a lot like NVIDIA's trend? NVIDIA's been moving the same way, also following the 26-day moving average, and recently it dropped back to the quarterly moving average. But as soon as it hit the quarterly moving average, there was immediate support, 2 consecutive touches, and support showed up right away. As long as the 50-day moving average, the green line here, hasn't been broken, there's no need to worry too much. It doesn't mean the trend has turned bearish. At most, it's just consolidating and fluctuating at a high level. This trend looks almost identical to NVIDIA's, so what does this mean? It means that whether it's general-purpose chips like GPUs or other types of chips, each has its own market. They don't really conflict with each other, nor do they completely take over each other's space. Sure, they'll compete, but it's not like one will totally replace the other. So if we look at stock prices and financial reports, we can see that the financials, whether it's Broadcom or NVIDIA, both performed well. Their stock prices rose in almost the same way. Before the US market opened, they hit new highs. But for weaker companies, you need to be more cautious. Take Lululemon, for example. I think lately, well, actually, it's not just recently, it hasn't been doing well for quite a while. Both its second quarter revenue and profit performance were poor. As for the third quarter financial report, whether it's $2.47 to $2.72 billion, or $2.47 to $2.50 billion, all of them fell short of expectations. EPS also missed, and the full-year revenue and outlook were all below market expectations. Of course, the company has been unable to meet market expectations or consumer demand, and it hasn't been able to balance the impact of the ongoing tariff war either. When it comes to costs and returns, it's the same story. That's why both its revenue and profits are underperforming. Q2, Q3, and the whole year have all been disappointing. In fact, this Lululemon lemon has been sour for a very long time, even though it went up 3.81% yesterday. Even though it went up 3.81%, actually, if you look at its financial reports from this April or June, whenever they were released, the company had already told everyone that the first, second, and third quarters, in fact, every quarter of the year, were all underperforming, all falling short of expectations. This time, they reported that same-store sales in the second quarter continued to grow by just 1% year over year, and even that 1% growth missed expectations. So, in reality, since January of this year, when the stock was at $423, it has just kept dropping and dropping all the way to now, even though there was a small rebound of 3.81% yesterday. It's just a drop in the bucket. From $423 down to $206 as of yesterday, that's basically been cut in half. Last year and the year before, its stock price was even higher, reaching over $500, like $510, $520, anyway, over $500. Just this year alone, it's been slashed in half. Whether it will keep dropping further, there's still a lot of pressure. All we can say is, since the financial reports haven't shown any improvement so far, you really need to be extra cautious. At the moment, before the market opens, it's still dropping sharply. So, with this big drop, let me just mention one last thing. Let's briefly go over the news from Infineon. They said that in April, demand was driven by customers stocking up in advance to deal with tariffs. Many clients did this, but now demand has already cooled off. So, for Infineon, the stock price is under some pressure at the moving average, and there's been a relatively significant pullback. Actually, a lot of companies are facing this situation right now. During the earlier tariff war, everyone rushed to stock up, but now that the stocking up is over, things are gradually cooling down. So, let's keep an eye on this. Tonight, the US stock market might be affected by the non-farm payroll and unemployment rate data. Results will be released. Non-farm payrolls are expected to differ significantly from market expectations. Tonight's US stock market may see bigger swings, and pressure on US stocks will be higher. Be cautious. Companies before the US market opens. The biggest gainer is Broadcom, AVGO, up 10%. Broadcom's earnings report was outstanding. Oracle and Albemarle are up 2.5% to 3.5% pre-market. As for Tesla's stock price, it also rose 2% in pre-market trading to $345. Of course, this is somewhat related to Musk. At least he didn't go head-to-head with Trump, and since he was invited, there's some room for political cooperation, or at least the imagination of it. So, Tesla's 2% pre-market gain today, I think, is related to this. In addition, Coinbase, the Bitcoin exchange, rose by 1.7% in pre-market trading, which is quite notable. After the sharp drop, things seem to stabilize, but for now, everything still looks okay. Companies like Western Digital and Micron Technology are both up 0.8%. As for the companies falling, we need to keep an eye on them. Just now we mentioned Raymond, right? In pre-market trading, it plunged 18%, a big drop of 18%. Their earnings report missed expectations. Copart is also down 2.8% in pre-market trading. Paramount, Nike, and Nvidia are all down between 1% and 2% pre-market. Overall, looking at our stock market today, I still think the risk level is quite high. As always, make sure to manage your positions carefully. Everyone really needs to be cautious. Lastly, just to mention the Dow Jones Index. Yesterday it did pretty well, rising 0.77%, and it's still holding above both the 20-day and 50-day moving averages, which is a good sign. Right now, the Dow, Nasdaq, and S&P wink with tongue sticking out indices are all above their respective moving averages. The relatively weaker one might be the Philadelphia Semiconductor Index. Right now, the SOX is fluctuating below the monthly and quarterly moving averages. Of course, if we look at the key stocks we just mentioned, like TSMC, Broadcom, Qualcomm, Intel, and Nvidia, if they can all hold above their quarterly moving averages, then after some consolidation, things should stabilize. Then there's still a chance for the SOX to climb back above the 50-day moving average. If it does get back above the 50-day moving average, that would provide stronger support for Taiwan's weighted index and semiconductor stocks. We'll need to keep an eye on this. If it breaks below the short term, it falls below the monthly and quarterly moving averages, we should be cautious. As for the Magnificent Seven, they're still maintaining their strong momentum. Yesterday, they rose by 1.33% and climbed back above the 20-day moving average. But in the short term, they're still fluctuating and consolidating around the 20-day and 50-day moving averages. Yesterday's rise was, of course, driven by Apple, Tesla, and Amazon. So the Magnificent Seven are very important. They continue to be a source of confidence and serve as a key indicator for the index. So, going forward, if you're not sure which stocks to buy, just keeping an eye on the Magnificent Seven is enough, especially for the second half of the year and into the fourth quarter. If you really don't know what to look at, just focus on the stocks of the Magnificent Seven. Use them as a key cash indicator and make them the main focus of your observation. That's enough. So, that's all for the group's related content and the first bit of information I'm providing before the US stock market opens. When class is over, remember to like, subscribe, and share for us. Also, a reminder, next Thursday, September 11th, in the afternoon, I'll be going to the Kaohsiung branch to give a talk. If any students are interested, you can get in touch with our Kaohsiung branch. I'll be there in the latter part of the month. Lastly, I wish everyone smooth trading, and I'll see you next week.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.